Howdy ho, everyone. How you doing? Good to have you with us on Monday for Trading Buddies. Ashley Force joining me shortly, and it's good to see everyone. It's Shane Walsh. My goodness gracious me. How you going, buddy? Good to see you. Gee, it looks nice in Bali. It's only about 25 degrees too hot, and the humidity's up to crap. But you know, it is what it is. I'm getting feedback in my ear holes at the moment, guys, so I've got to fix that. Hang on 2 secs. That's interesting. I've got a recording in my ears. That's very, very, very distracting. How and why is that the case? Oh, I see. Q-tubing. All right, let me get rid of that. And how? There we go. I think I've got it. Rightio, what's going on around the place? Let's have a look and see, shall we? We'll have a look at the gold chart firstly, and it is on a tear, that precious metal thing. And going. I hope you've got some gold in the cupboard or under the mattress or somewhere, because it looks like it's on its way. Where to? Good question. I don't know that we can trade a breakout on this. Oh, maybe we can. It's coming back into the realms of possibility. So let's have a look at that. High of the range is going to be the candle that we have currently on the hourly chart. Low of the range is going to be right there. Or there. Yeah. Okay, let's see if it settles down in here. We might be able to place a trade and see if we can get that entry. Don't like where the daily pivot is directly underneath our entry, but anyway, we'll sort that out in just a tick. Shane, actually, it was the Canada climate, because I was Canada and Alaska, which is where I've been. So I can't blame the Tassie climate. I can fuck. Well, it wasn't that cold actually. It's still summer over there, or was until the last few days. Okay, so no gold at the moment. We'll wait a minute to see if we're going to place this order. What's above us? We're entering at DR1. We've got DR2 above us. I actually don't like the trade at all for that reason. So you'd be trading long. Sorry, you'd be trading long with a risk of $11.50. Potential reward's about the same to DR2. That's not too bad, but the reward on the downside is really poor. So you've got $1.50. They're not odds that I like. So I won't be trading that. That doesn't make any sense to me at all. What does make sense to me, that's what we need to see. I've got 2 orders in the markets. We'll start with those. Pound versus the Swissy is one. These are both on the weekly charts, and the weekly charts are not that friendly this week, but this one looks okay. What we have here is I've isolated this range in here between 110.50, let's say, and 115-ish. And we've popped ourselves outside of that range a couple of times in recent months. But here we are back inside it again. And we've had a big reversal on a support level. Then we've had a little bit of a rally after that with that big follow-through bar. Then we've had a pullback straight to the monthly pivot, or the new monthly pivot. And we've got a bullish bar here, suggesting that if price goes to here, it's going to go in search of the high of the range, which is up here around about that 115 mark, as I said. So had no hesitation in placing that order long, if you want to follow it. The entry is at 1.1177, 1.1177. Stop loss is 156 pips below that. I should be able to work that out, shouldn't I? 1.10, hang on, 1.1021, if I'm not mistaken. How am I going? Yeah, pretty good. 1.1021. That's the stop loss. and the first take profit is going to be at 1.1275. Not that sexy. It's about two-thirds of the way to the risk. But I'm anticipating that we go higher than that, and probably looking at a target around about that 115 mark. So that's pound versus the Swissy. I'll have a look at the relative strengths on that in a minute, just to give you an idea as to why I might think that's a possible win that we might have. But in the meantime, I need to monitor YouTube, guys. 2 secs. There we go. The other trade, and it's also involving the pound, a little bit more risky, this one, because it's got the dollar in it. And as you probably are aware, we have got the Federal Open Market Committee, or the Fed, better known as, strutting its stuff on Wednesday night, Thursday morning for most of us. And of course, that has a big likelihood of setting a new direction, certainly for the dollar and related pairs. Ash and I will probably have a yak about that in just a bit, but the other trade is, and I aggregated my risk on this. I've only got a very small risk on pound versus the Swissy, 1.15 of a percent, in fact, because the other one is pound versus the dollar, which actually has triggered at this point. Pound versus the dollar. We tried to get this last week as a break and retest at the top of our channel. Nothing's changed, in my humble opinion. In fact, it's probably got a better entry. Well, it has got a better entry, obviously, because it's a better price. But it did come down and test the monthly pivot and gave us a big reversal bar on that. The only thing I don't like about this is the fact that it had a high test bar preceding a low test bar. That's normally a no-go zone for me, but on a weekly chart, I'm prepared to risk it. I will be monitoring this, and if we get close to the Fed and we're not at TP1, I will look to take either an early TP1, or if we're in negative territory, I'll probably close the order. We'll see. I'll manage that as the week goes by, and you guys will be informed, or those of you who are in the Telegram group will be informed of that as we go along. Now, quickly, let's go and have a look at the indexes, currency indexes, and here's why I have an opinion on those pound pairs. The dollar, look, it's at a crucial level, frankly. Let me go a bit tighter on that. And you can see that we've got a resistance trade line, we've got a support trade line. We've also got a horizontal level coming through here. So very, 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 very important level. This, what is it, 101, very, very near to 101. I don't know what's going to happen next, guys, but what I can tell you is that the overall picture is giving me bearishness. And we just need to break this level. If we break this level, I think this is off to the races down to a much more acceptable level in the 90s somewhere. So I'm still bearish the dollar, but I do concede that we're at this strong level, and it's either going to be support or resistance. I don't know what yet, but it looks to me at the moment as though we're favouring downside. So I'm a little bit bearish the dollar, but the Fed's going to have a big influence over what this currency index looks like towards the end of the week. Aussie, yeah, kind of indecisive on this one also, not because I don't like the chart. The chart is telling me buy, because we're still in this rectangle, haven't quite reached the top, or have we? And that's the conundrum that I have. Is this now a reversal, and am I looking for a lower high, or is this a higher low that's going to drive it back to this trend line and confluence of top of the range? I favour that, to be fair. Ash will probably tell me the fundamentals around the Aussie and the COTS and seasonals, and see if that's going to be a reliable indicator. But I'm slightly bullish, but not convinced on the Aussie at this point. Canadian dollar, would much prefer that it had come down and retested this area here before I was going to say I'm bullish the CAD. And I probably think that that's still the case. I think it's probably still a little bit more retracement. That said, it is at a horizontal level, so it may well bounce here, but not convinced. The pound, on the other hand, is showing good signs, broke through this horizontal level and retested it. The only thing that didn't happen, and as I showed you on pound versus the dollar, the only thing that didn't happen is it didn't come down and retest that pivot. Well, it's now done that, and it's also retested this previous high, and it looks very much like we're in an uptrend, does it not? This looks to be the next point of bounce to me. So bullish the pound. Not sure fundamentally whether that's appropriate, but we'll find out a little bit more from Ash shortly. The Swissy, yeah, look, still think there's room for the Swissy to go, but I'm not sure it's now. We've got an indecisive bar there last week, coming off, well, I suppose 2 indecisive bars in that we failed to breach this high here. So we may still have a little bit of retracement left there, not sure, but I think ultimately the Swissy is up here somewhere. Kiwi. Kiwi looks to be in a nice bounce point also. Again, fundamentally, I'm not sure I need to be on board the Kiwi at the moment, but there does appear to be a little bit of risk appetite about. And if that's the case, maybe the Kiwi can rally. Is that a good point to pick up a little bit more? The yen continues its strength, once again at a resistance level, and very, 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 very difficult for me to jump into the yen now. It would have been nice down here, of course, but right now I'm not so sure. It does look as though it wants and is keen to keep going, however, but you can't deny that. And the euro underneath resistance and headed to support, in my humble opinion. I like this rejection bar, failed to close back above the trade line, didn't give us an ABC long, failed to take out the high. Looks to me like it's under pressure, and I do think it's coming down. So bearish the euro, bullish the pound. That makes euro pound an interesting pair to watch. And we tried to trade that last week and couldn't get into it. Dollar, interesting, bearish, and that's why I'm pound dollar long, and the Swissy, as I said, may be coming back a little bit as well, and that's why I'm pound Swissy long. I think I'll leave it there for now and get to Ash. G'day, buddy. How are you?
Yeah, not too bad, mate. Not too bad. Having a bit of a scrabble around the charts just to see if there's anything that's hyper clear, which I'm not really seeing. There's a few sort of ideas I've got, but yeah, it's not it's okay, but it's, you know, as I say, it's not really all that clear. We got, obviously, as you quite rightly point out, mate, we got loads of stuff this week. Not only do we have the FOMC rate decision, but we also have CPI data from the UK and from Europe as well. We're sort of like, they're probably the headline events. So I think the question really comes in at, do we want to trade before? Well, not do we want to trade. Is there going to be an opportunity before that, or should we be waiting really for after that? You know, we got until Wednesday to kind of make some decisions on that. And if we're going to take a position, then it probably would be more likely to take it today. Actually, CPI from Canada as well. So we got lots and lots of things coming out. That's tomorrow.
Right.
Yeah, there's just lots of stuff. I mean, I'll show you what I'm looking at the Euro Aussie for a potential trade to the upside. Let me just bring my chart in for you.
Okay.
Yeah, and it's really down to the charts. I mean, when we sort of like, if we kind of think about actually, let me bring it on here instead. When we think about the fundamentals, the you know, the Eurozone has just lowered interest rates, and you know, for that reason, you'd kind of think that there would be a little bit more pressure for the euro. The one thing is that CPI data probably won't be quite as pivotal. Now we've seen the interest rate. You know, we've got another load of a slew of data really before we get another rate decision. So it will be looked at, but it depends, what it looks like to a degree. It would have to be sort of significantly lower, I think, to kind of negatively affect the euro now. But I'm interested in the euro. As I was just looking at this pound Swiss, I quite like the pound. This is this is the challenge, when you look at this chart, and this is really a test for everyone. When you look at this chart, do you see, and this is a question for you, mate, because I'm quite interested on your take on it. Do you see this low down here, this high here, and this as a higher low? Or do you see this? I haven't finished yet. This high here, this as a potential support line, and this potentially as a lower high?
I do. But it's not.
So
potential, yes. The higher low is already in place. The lower high isn't, in my opinion.
Yeah. I'd go with you on that. It's questionable, isn't it? But it kind of puts me off the chart. That's the key, really. I sort of looked at it as a potential trade long, and because I can't decipher whether this is a higher low or a lower high at this particular point, then I'm not that interested. When you go to the daily, it becomes a little bit clearer. It does look like more of a higher low, but we are in this range, so not that attractive in many respects. So that was one of them. But Euro Aussie I quite like. When I look at this one, this one to me looks a lot clearer, even though, same sort of chart, but on the flip in a lot of ways. Is this a lower high here? Well, I suppose it is. Higher high, higher low, and just pushing higher. Now there is a monthly pivot which is sitting somewhere around about this level up here, which I think is a decent target. When you look at this on the daily, could be an inverted head and shoulders. So if I'm going a bit quick, guys, but I'm still making a decision on this. There you go. There's the left shoulder. There's the head. Could be looking at a right shoulder here. So this particular pattern is the pattern which kind of forms an inverted head and shoulders, which would suggest that we may well see this this potential neckline, and it looks like it's upper sloping, so it looks like we might sort of break through, maybe get back to those maybe get back to the monthly pivot off that. What I'm really watching out for with this one is whether the problem is there's a weekly pivot sitting right above it, so that makes it difficult. You look at this on the hourly, and the question for me on the hourly, really, kind of when I look at it, let me just do this, is where the trend line kind of exists. If you look at that, then that would suggest it's kind of there, but there might be just some kind of case to be made that we're looking at. Actually, that's going to pretty much say the same thing. Sometimes I quite like switching to the closing prices just to get a bit more clarity, but that looks like it's on resistance. But I quite like the 15, and all my trades will be triggered off the 15. And there's been a decent kind of surge to the upside on the 15. So now the 15 is different because the 15 looks like there's the trend line there, which suggests that this may well be a hold, but this is where the weekly pivot currently sits. So it's a bit of a difficult one. It's not that attractive for that reason, which makes it kind of sit back in my on my list a little bit. But could there be some weakness with the Aussie? I'm looking around at the data. COT data is weak, actually, for the Aussie. It's weak for the pound, interestingly, and it's weak for the yen. And I think, one of the reasons that the COT data is weak for the yen is that's where the risk is. When you sort of like look at it now, it's had such a huge move to the downside, and now we're, pound yen. So a big move to the upside for the yen. Aggressive, really, a move to the upside on the yen. And there is a support line along here. So I think participants are not necessarily saying the yen is going to rally from this point, but they are saying, the risk here is going up. So we're protecting for the upside. Protection for the downside seems to be just dissipating a little bit. So we're looking at potential kind of moves to the upside for the yen, but probably not yet. Some of the data coming out of Japan is actually pretty good and suggests that they are going through their inflation cycle now, where everybody else is going through a disinflation sort of period. So not really the right time. But the yen, it's going to be an attractive trade at some point. This would suggest. So I'm looking out for that one, mate. But
about 6 weeks ago, very attractive.
Yeah. but now we're sort of, in a situation where I think the decision really for everybody to make, and this is a decision for all traders really. Everybody has to recognise that news makes the moves. That's why the market moves. It's because of the data points and everything else. Data from the UK was looking pretty good until we got a GDP number last week, which was atrocious. It was a complete surprise to the downside. So that kind of puts the UK economy under a lot of pressure, and that sort of also puts the Bank of England in a little bit of a state of pressure as well. Now they're due an interest rate decision as well. At the minute, it seems that people are quite happy to suggest that they're going to stay where they are. I'm not so sure about that. I'm not so sure whether that's going to be the case or not. They may well choose to lower interest rates again. I think inflation's at 2.2%, so they are probably just about in the band of safety, and that may well weaken the pound. But for right now, you'd sort of be looking at the pound and thinking, well, there might well be some upside. And I did look at this one as well. This is another chart I looked at, the pound Kiwi for a long. I'm probably sort of like moving against some of the riskier ones this week. So I think pound, the Aussie could weaken a little bit, and the Kiwi could weaken a little bit. I heard you talk about the FOMC and what's going on with the dollar, and I think the Aussie dollar is an interesting one, because the Aussie dollar is probably sort of looking like it wants to try and get back up here again. And if we do see an interest rate cut, the Aussie and the Kiwi are probably going to do the best out of it. You would suspect, because of the growth indications that would put back into the market. But as you rightly say, mate, we're kind of sat on
like a retest of the neckline, doesn't it?
That's the other thing. It looks like we're on a resistance point right here. So I think where I kind of sit right now is that I'm not really that comfortable so far today looking for placing trades. I've looked around, but I'm not that comfortable actually sort of placing them. Things look okay. In fact, I shouldn't say today. I should say this session, because things changed during the US session. Or things often change during the US session. So I'm not that comfortable as we sit right now. I think things look all right, but I haven't really kind of I haven't got convinced by anything with that much confidence. The Euro Aussie to the upside is probably my favourite, but I do want to see it hold above this area on the 15, and probably come and just give me a little bit of downside first. So that's the trend line that I'm looking at. It might even be a little bit steeper than that. Yeah, it might be even a little bit steeper than that. We're on resistance right now, so there's no trade here. But if it comes back here, and that would give it a little bit of confluence if it kind of was the trend line over time and along that particular area. Maybe even a couple more. There's probably one there as well. But I need some downside, and I need to see a bar that holds before I get interested in it. So it's on my watch list, mate, but I've got nothing of huge confidence right now. Pound, euro, yen, Kiwi, and Swissy are all relatively weak when we come to seasonal data. With the dollar looking okay, actually. Dollar looks pretty good. Yeah, the dollar looks all right. Seasonally, it doesn't look too bad at all.
My charts are telling me. Well, the indexes are telling me something completely different, which is always fun when you go. Yeah, I'm keen here, but then bugger, knocked on the head.
Yeah, well, the interesting thing about seasonal charts and as well is that if you look back at, the dollar tends to be sort of like relatively strong going into the next month. And if you look back historically, this particular month has got a higher probability of an interest rate hike. So when you sort of think of the seasonals and why the dollar would rally at this particular time, it tends to sort of rally because there's an interest rate hike. But this time round, we're not going to get that interest rate hike. And I think we can say that with quite a broad sense of confidence, because they're going to lower interest rates. The question is by how much. Is it going to be 25 basis points, or is it going to be 50 basis points? Probably 25. But that still doesn't suggest a dollar rally. So whether we kind of put quite as much credence,
that's well truly priced in, isn't it?
Yeah, you'd think so, mate. And whether we put as much weight on top of the seasonal indicators for that reason is questionable. So I'm not.
Two other things potentially going to influence the dollar as well.
Yeah.
We're now what's the date? 7 weeks out from the election, and
yes,
they're trying still to only have one candidate. I noticed they had another shot at Trumpy today.
Oh, did they?
Didn't hear that one. Yep.
No, yep. What's that one?
Guns fired. He was playing golf, and yeah, on his own course, naturally, and a sniper got within 500 meters of him, and there was gunfire. I don't know. There was certainly he wasn't injured or anything like that. But yeah, another great.
Wow. Did they take the sniper out?
No, he's still alive apparently.
But is he being caught?
From what I heard, yeah, got him.
Yeah, you see, they need
all the rest of.
They need to catch him just to sort of like see what the motive is. Is it somebody that is just is it crazed?
Yes.
I mean, this is a bit like the Lee Harvey Oswald scenario, isn't it? Where there's so many questions about who he was linked to, and there's always these conspiracy theories about who he's linked to, but you'll never know because they obviously he didn't survive, so they kind of need to catch these guys and give them a bit of a.
I'm actually not sure if he survived. I don't know the answer to that question.
Right.
Will tell us, I suppose, but
yeah,
you would think there would be return fire without question.
Yeah. There's going to be some going to need to be some questions asked.
Yeah, 100%. I don't think that makes any difference because probably expected. I mean, like we said 8 years ago, the only thing that surprised me is they haven't taken him out, and they're trying hard.
Yeah. The
8 years ahead of our time, Ash.
Yeah.
Yeah. We would have been waiting a long time for a payday.
Yeah, I mean, this is the thing, isn't it? I mean, there's so many there's so many geopolitical kind of tensions going on as well. Thoughts of where it comes from, it does sort of, start to kind of like broaden out as well. Yeah, just
actually, I suppose that's on that subject. As it seems, the wheel has turned, and the Harris vote seems to be getting stronger and stronger and stronger. Is that going to influence the dollar?
Oh yeah, I would have thought so, mate. I think it will influence the markets to a greater or lesser degree. I mean, just if you think about what kind of President Trump is. Trump is all about kind of putting pressure on the central bank to lower interest rates and allow business to boom. I think Harris is going to be a lot more conservative than that, and I think that she probably will leave the central bank to start with. She'll even probably do their job and not put too much pressure on them. So that will have an effect on stuff like the Nasdaq, and of course that will have an effect on the dollar. And if Trump gets the ability, if he's given the ability again to kind of pressure the central banks to lower interest rates, then that is effectively what he's trying to do is weaken the dollar. So you'd think that Trump would be actually negative for the dollar. And but what you then kind of trade it up against is interesting. I mean, I can't believe how gold just continues to rocket to the upside. I mean, it's just last week another fresh high with gold. So it's just what messages is this sending is the question when you sort of like look at gold. This is on a weekly chart. So since September of 2023. So we're now a year in. to the gold trade, and maybe, you know, well, nearly a year in, so we're October, and maybe that year, that 12 months is going to be significant. You know, maybe sort of like 12 months in is going to be a significant turning point. But we are also about to enter a seasonal pattern, a seasonal period for gold, which is also very strong.
Yeah.
So, you know, I mean, it's just, I suppose you could even say back in 2022, the whole thing started. But the most recent run was really sort of like, you know, back here in October, in 2022, 23, and we've seen gold go from 1,800 now up to 2,500. So a huge move to the upside, really. I mean, you're looking at, what's that, 40%, a 40% gain in gold or something, nearly a 40% run in gold in a matter of a year. It's just astonishing, really, for this kind of instrument. You know, other instruments, obviously, you can see that. Mind you, 40% in a year on anything. If you make 40% on your account in a year, on your investments in a year, you'd be incredibly happy.
On your entire portfolio, you're doing that.
Yeah, you're doing really well, aren't you? So yeah, crazy time, really, mate. And who knows how far this goes? Not really an attractive trade anymore, for sure. But it, you know, on an intraday basis, I'm sure there's still opportunities. Silver on Friday, another amazing move. Look at that. I mean, it just kind of took off off the bat. Was it Friday? 12th, 13th,
Friday.
Thursday, yeah. Yeah, just a crazy move, really. Thursday and Friday, yeah, crazy move on silver. And I find this one interesting because obviously silver's a precious metal, but it is an industrial metal, and I guess in the end it will probably, you know, percentage wise, it will probably do better than gold if we start to see a weakness of the dollar. And some businesses, you know, a little bit of a boost in kind of global global economic picture. We'll probably see sort of like a greater boost. I don't know what the ratio currently is, but I'll do that. I'll do that in the background just to kind of let you know what the gold to silver ratio is.
A little bit. I keep missing silver. I was saying to my wife on Thursday, maybe Wednesday, I said we better duck down to the bullion exchange and get a little bit more silver.
Yeah,
missed it.
Well, the gold silver ratio is currently 83, which is incredibly high, and that promotes selling gold and buying silver. You know, that's basically what that is telling us, and obviously we can do that. You know, we could do that on MT4. Selling gold and buying silver. What you'd have to make sure is, I'm pretty sure when you look at this, let's just have a look. The long swap is 53. So if you were buying silver, that's going to cost 53. Now, what exactly how that relates, I'm not sure. But the short swap on gold is
50 cents in every $10, isn't it?
50 cents in every $10 and 40 cents in every $10 of silver. So you actually, you know, the spread on that is you know, you're going to be net negative 10 cents in every $10. So it's basically it's working out a lot, is it? I'm not sure what the lot is on gold and silver, but this is negative 41. So you got a positive 51 if you go long on silver. Sorry, negative 51 if you go long. So it's going to cost you 51 cents in every $10, if that's correct, and negative 51 on the the short is 30. So if you were to go short on gold, you're going to get paid 30 cents. So you're going to be 20 cents down if you spend $10 on the day every day, and that would be the hedge trade. So you'd be buying silver and selling gold, and working out on a percentage difference. So silver moves down 30 down to 27, then you're down 10%. And you know, if gold moves down, gold would have to move down to around about 220 to 2,270 or something.
Yeah, that's the biggest problem with those, or either of those. if you're buying them is the holding costs. It's really expensive.
Yeah.
It's cool when it moves like this. No problem
Yeah.
at all. But
Yeah.
it doesn't do that all the time.
No, I mean, do you know what I think the biggest problem with this this particular position is the volatility. You know, the volatility that you'll see in silver is far greater than you'll see in gold. So if the trade turns round, then silver could really get mashed up. You know, no matter what the ratio is. You know, the ratio 83 is almost irrelevant because of the volatility. You know, gold would have to get down to this kind of area here. So there's a 10% ish move in gold, and if you look at silver, a 10% move in silver is also down to around about this area here. I mean, he did that in a day. You know, we're talking about 10% on this in a day.
Certainly, the size of the bars at the moment are telling you something. That
yeah,
the market's willing to spend.
yeah, absolutely right. Yeah, so you know, not really sort of a whole bunch going on for me, mate. Say the Aussie, the Euro Aussie is my favourite, but I don't love it enough. Oh, I do quite like it, but do I love it enough?
What about the yen?
Well, the yen's a tricky one because yeah, oh for sure. Well, not on an intraday basis, no. But you know, if you're looking for a long-term sort of position on the yen, the thing that would keep me away is the COT data purely. You know, not that the fundamentals have changed particularly. I think we're getting an unwinding and this unwinding of interest rates from central banks that does suggest that you know the yen's going to start to kind of rebalance itself, and it's got a long way to go. I mean, it looks like it's come a long way just because it was so aggressive, but it's got a long way to go if you kind of compare where we were historically back in 2018. This is the pound yen at 129. Now it's at 183. I mean, there's lots of room really. So I don't know where the midpoint is, but it's probably somewhere. Actually, we can find it. The midpoint on the actual chart there is it's all the way down to 165, you know. So there is still plenty of room for downside on the longer term basis for the yen, but because of the aggressiveness of the move, the timing just doesn't look right now. Decent looking bar there as well on in August. So there are buyers that are sitting down here all the way up to this point here. So you'd think that the same thing would happen where or there's a chance the same thing would happen when it comes back down here again. So not a lot of room to the downside. No retest really. You know, in this area, it'd have to come up first. You know, where would you go? I suppose you could maybe try something like that. Well, yeah, there's a 3-1 down there. Yeah, it still looks like it's heavy. The you know, everything against the yen still looks like it's pretty heavy. So certainly some room. Certainly got some room to travel, but not for me. The COT data would just keep me away from this one. And they look worried. You know, the participants on the COT report look relatively concerned with the long position on the yen. And volatility could really pick up on this. You might sort of like get something and then all of a sudden get swept the other way briefly and then it comes back down again. I think that's what we might see more and more of in this particular area. It is a buy zone really. Whether you'd want to buy it would be another question.
That would be another question. Speaking of questions, should we see what George has got from a price
action
point of view?
Yeah, let's do that. Okay,
I think that's a good idea.
I think it's a great idea.
Of course, coming to us via recording, he may have something far better than you and I do at the moment. Yeah,
well, and also, you know, if anybody in the room's got anything, and you know they've got any comments, questions, or trades, then obviously sort of pitch in as well. But let's play George for now. Make sure my sound is sharing. Just give me a thumbs up if it's all good, mate.
Will do.
So welcome to Trading Buddies.
All good.
Where I'm a guest on behalf of Jeff and Ash. So I trust you are all well. We are building up on tracking these 4 markets, which we've been doing since last week. So if you haven't caught up with that video, I suggest that you do that so that you can pick up a little bit of some price action thoughts that I'm sharing with you. So DAX 30, same price action as DAX 40, German 30. Let's have a look at that. I've just marked in a yellow rectangle here. This is where we were when we did the show last week. And I recall then talking to you that if the bears are strong, they're going to need to accelerate beneath this level and go and test this level. Now, I also pointed out to you, and if you are not aware of the price action terms that I use, I recommended that you go to, on the ATW shows, YouTube, look for my show, Price Action Profits, look for the record on the 1st of September where I talk about the price action terms. So here, I did say this is a leg one, first leg of a bear breakout, pullback, leg two, and you're pretty close to the leg two. So as far as bears are concerned, who had sold here, who understand price action, and they got the pullback, their initial objective will be to get to this level. So when you get to that level and there's no follow through, then you got to decide. At that point, either bring your stop to break even or to another level here, because you got to be saying to yourself, well, the bears have received their satisfaction. They didn't quite get to a measured move. Maybe they were using different measures. I went from the high of the candle. Maybe computers were just using the bodies. Perfect. Bang. They just take their profits there and they're done. So if you didn't take your profit here and you waited to see if there'll be follow through, the next day you get a failed breakout like that, you gotta just take your profits or tighten your stops and get out a break even, which is perfectly fine. Now, the bears, had they been strong, they would have carried on with a bit of a follow through at that point and maybe try and do a measured move of the breakout. Okay, breaking out beneath that candle to get down to that level and start to test that level of support here, the big bull breakout. But we didn't get there. So the bulls are pretty strong. The bulls have been defending their positions. If you just look at the chart and you say to yourself, well, okay, yeah, leg one, leg two, bears got their satisfaction, but why did the bulls jump in so strong at this point? You could infer that there was the biggest breakout that we got that erased the breakout beneath this tight trading range. And that's a level that's been defended. So when you get, that's happening there, that kind of makes sense. Right? The bulls are defending that. The bears have reached their satisfaction. So, you could leave it in. I'm going to take it out. I don't want to clutter my charts. But whenever you see, the point is here, whenever you see trend candles, their highs and lows get tested. That was a test of that big trend candle. The bears were strong, they would have taken out half of it and pulled back and carried on going. But that didn't actually take place. So that's perfectly fine. Now, what is likely to happen? If you have a look at the chart, the most distinguishing feature in this month is this breakout that we had here on the 3rd of September. Huge bear breakout, it raised in 4 or 5 days of work by the bulls and coming back into this level that the bears had defended. So the bears have an opportunity to create a lower high. Okay, big breakout, they got their satisfaction, but they still have the strength that turned the market. The bears are strong. We can expect that in this week, there'll be a lot more selling to come back and test at that level. And if the bulls are strong, they'll come back and just enter into a trading range. If they're not, the bears will sell and keep on going to test levels as they go lower and lower. So what would you do if you are trading this market? You're trying to find ways to get in. If you're trading on the daily time frame, again, you got to remember exactly where you are. If you want to get in and say, well, I'm going to put an order here and buy and go back to work, whatever the case may be, fantastic, but you can't put your stop down. Your stop has to come to the bottom of what is developing as a potential trading range. That is the only place to put a price action stop, in this kind of market, because you're buying, you are in a developing trading range. If it keeps going your way, fantastic. The next day, you can start to pull your stop up, take off some risk. But if you just want to get in and buy, that's where your stop should be. As a bear, could you sell and say, well, I think the bears are pretty strong. I want to start to sell in case, the next day we're down here. If you want to place an order and sell, your stop at the very least is going to be above the high of this candle. Options. Now, even now, just thinking about it, do I really want to do that? You know, we are in the middle, basically, of a new developing range. It would be better if I was, or for me, rather, give you my advice, I'd rather wait and get proof. If we get a bear candle, decent enough bear candle, like that, for example, reversing, so small tails, etc., closing beneath the low of Friday, I would be able to put a sell order beneath here, but my stop is still going to be up above. If get an inside candle, I'm going to wait. Why do we have an inside candle? Bulls are either strong or bears are strong. So it's probably worthwhile for you if you did not get in to this market earlier on and jump in. Now, where could you have gotten in during the week? You could have said to yourself, okay, bears are not strong enough to carry on, so let me wait. Now I have a decent enough bit of a double bottom, micro double bottom, market went down once, came back, etc. Inside candle, and now I have a follow-through candle. I want to buy. If you had bought that, your stop has to come down here. If you had bought here and you get that, then you're gonna pull we should have pulled your stop to the low of this candle by now, just to see if you get acceleration. Fine, you keep going up with it. Right now. If you bought here and your stop is here, and your original stop was here, it's really pretty negligible in terms of what you could lose. So that's what you would have done. So some thoughts, we are on that. Brent crude oil is absolutely fantastic. Remember, again, we spoke of the measured move trading range, and we said there is a measured move of that trading range. You also spoke of saying, if you look at this big breakout candle here, the measured move is down here. I put all of these last week saying if the bears are strong, they want to get to that level at the very least, and then they can carry on. So spoke about it here. On Tuesday, we had the bears breaking beneath that level of support that we've had, which was low of 2023. Tested the measured move, tested that measured move, and they did not have enough strength to carry on with the breakout. Market is still bearish. If you are a reversal trader, you could have taken that and put a wide enough stop at the bottom here. Then you just pull your stop up. Now you got a little risk in the market because you're hoping that at least we'll get to test that level. You make a decent 1-to-1 and maybe might even go a little bit higher. But if you want higher probability, so reversal trader means you're going to get stopped out a lot more often. 40% chances you win, and you win big. I mean, you could trade as a reversal trader up here and just grit your teeth and hold all the way down here. Fantastic profits. But as a reversal trader, you're only winning 40% of the time, so you're going to be comfortable losing 60% of the time. If you are not comfortable losing 60% of the time, wait for higher probability, which would come in the form of a higher low double bottom. Okay. So if the bulls are strong enough, they might get a high low double bottom here. Then you just jump in and trade. Like here, you say, oh, I'm not taking that. I'm not a reversal trader. I'm going to wait for a lower high, and I got a lower high here, breakout, pullback, higher probability to sell this, stop up here, sleep well, a lot more profit. That's how you will trade this. So if you're a reversal trader, you have jumped in earlier on. If you still want to jump in and just buy, your stop is still, you could put a tighter stop now at this stage, but I don't know if you want to buy above a bear doji. For selling, I would wait until we're down here with strength. When we clear these levels, then you can consider to trade a breakout or wait for a pullback. For bulls, I'll just wait for a higher low of sorts and then take it, manage it, and hopefully we smash through that and keep going up. So we'll see what happens with that. Silver, absolutely fantastic. I think the closing remark was, guys, we are in the middle of a trading range. I remember saying that distinctly. And I said, if you want to trade this, you can go ahead. But if you buy in, your stop is down here. If you are selling, your stop is up there. So if you are following this market and you saw after this bear reversal that the bears failed to accelerate down, and you saw that micro double bottom, that inside candle is a bull candle, and if you're buying, you should have bought, put your stop down here. There's nowhere else to put your stop. Put your stop down here. When you get this huge acceleration, you pull your stop up, remove the risk, bang, you'll be sitting in profits. Okay, so we say that clearly. That's how you trade when you're in the middle of a trading range. Just put your stop either extremes and then manage it. But if we did not take any of those trades, wow, what a beautiful move by the bulls, and there have been opportunities in the lower time frames, whatever you trade, 4 hourly, 15, 5-minute, 1 minute opportunities all over. Now, what do you do if you are not already in a trade? If I was trading this market, I would not be jumping in, because we get into these levels here. Now, when I say I'll not be jumping in, remember, I'm trying to find higher probabilities. If I do not get into a trend all the way with this breakout, I'm just going to have to wait for a pullback. If I get a decent enough pullback, I'll jump in, manage my trade, and see if we can smash through that level. If you want to still get in and say, well, I like to trade breakouts, that's my strategy, well, by all means, buy above here. But for the price action trader, the stop is going to come down here. A tighter stop is here. That's about as tight as I would put it. I wouldn't put it here if I'm trading a breakout. I'll just put a proper stop because I'm hoping that we smash through there and manage my trade. Get triggered into the trade and hopefully get a bull candle. Then you can pull your stop up, take out some of the risk and see what happens. Okay, so if you don't want to put a stop down here, then just wait. Wait and see what happens at this level of resistance. Absolutely beautiful for the bears. Wedge top went up once, twice, third time was let down, lower high and went to. So the bears are going to be defending that level. You can expect that to happen one form or the other. If the bulls are super strong, man, they'll just put a candle like this above there and silver becomes new gold, gold and silver. All right, so that's my thoughts. I mean, if we get up here and we get a bear candle at some point, it's enough trend candle, again, you get back into that mode. Do you want to take the reversal trade, 40% chance of success. If it works, I make a lot of money. So I can take that with the white stop, the breakout, or wait. So here, they've been triggered, good, but that would have been fantastic. That's now a little bit more higher probability than trying to sell beneath any of that. And finally, a currency. Remember, whatever I'm sharing here, you can just take and apply to any market. Doesn't matter what what market you have. If I didn't have, again, the names here or the price line here, you wouldn't know what it is. So look at your charts, apply the same kind of thing. We spoke about this, leg 1, leg 2, and that's levels that we add. And this level here, George did market, and there's a level here. Let's see. Okay, there you go. So there's a level here. We broke above that in 2023, tried to break out beneath it, went up, tried to break out, tested. So that level is the level that has been tested. Pretty strong level of support on the euro versus yen. A high volume currency, you got the euro in, you got the yen, you got the US dollar highly traded. So good market to trade. The bulls had a chance here to create a double bottom. And we spoke about that. Had they been strong and just given us a decent enough candle, we would expect this to be testing these levels. But they're not strong enough to defend it. So the bears sold off. But who created the tail? Who stopped the bears from smashing below there? It is the bulls. So the bulls, although they failed to create a double bottom here, acceleration up, on end of Monday, they had the potential. It was a double bottom, and they failed. Now we have a wedge bottom, market level once, twice, third time. For this wedge to hold, the bulls need to give us a bull candle. And if you get a bull candle closing above this level, then you must consider buying and just put your stop and measured move down here, and hopefully you get acceleration up. That would be a decent enough trade to take as an early trade reversal trade. If you want higher probability, just wait for the breakout, some form of a pullback, boom. So wait for the breakout. Oh, not enough, and now I want a little bit more probability. Pullback, get into the market. Pullback, get into the market. So if you don't take the breakout trade, you wait for the pullback. All right, traders. Thank you, trading buddies. Thank you, Jeff. Thank you, Ash. Thank you, traders. I hope you're enjoying insights into the price action workings of the market. And you are taking the trades and managing the trades. Name is George. We shall catch up with you next week. Take care, guys. Bye-bye.
There we go, mate. There we go. Do you know,
Yeah,
I had a
one thing. Well, there's many things you can say about George, but the one thing that stands out with George always is that there's absolutely no negotiations. It's either there or it's not. Forget about someone taking a shot at Trump. Forget about the FOMC. Forget about everything else. It's nothing to do with that. It's all about price action. And you know, you've got to love that. You really got to love that. It's so simple. And we always say this: simple is not necessarily easy, and that's the case. You know, you need to be all over. What George has been all over for all these years. You know, he works very, very hard, and we've seen that time and time again. So price action trading, while it sounds absolutely fantastic, you don't have to worry about anything else except what's going on the chart. It is an art form, and he's pretty good at it.
Yeah, agreed, mate. I'm having a look around, and honestly, mate, the only thing that I'm 50-50 on, I suppose, would be the Euro Kiwi long, and probably the Euro Aussie long. And when I look at it, there's enough there for me to say. I mean, I'll just show you my screen very, very briefly. You know, I would maybe sort of encourage, you know, this is as a first thing really I would sort of say is that look at the prices and look at how the prices are moving. This tells us this market has got low volatility. They're not flicking around very fast. They're moving in drips and drabs. You can almost count the seconds between some of the price movements. So that tells us there's low volatility. Now you need to sort of, you know, recognize whether you are, you know, a trader that prefers low or high volatility, but that's just something to note. Euro Aussie, I like this. Sorry, Euro Kiwi. I like this. I like the Euro Aussie as well, but I like the Euro Kiwi for a long. And there would be my target there if I was going to get
Similar
into
trade,
this.
right?
Similar trade, exactly. Yeah, it's just picking which one. There's the stop loss down there for me, and you can see that there's a trend line just kind of coming along here. So we would just be slightly above the trend line on the stop. There is a monthly pivot which sits just here. So I'm just going to change that to red. There's a monthly pivot that sits just here, right now. But if I managed to get an entry, let me just take the ray off and make it look like a bit like a monthly pivot. There we go. Yeah, so there's the monthly pivot. It might be just right actually where price got rejected. Monthly pivot's right on there. Now what I'm sort of like thinking about now with this one is that if this is a trade along here, if I was to sort of like manage to get any kind of entry, then I would note this down as a possible trade here with the stop loss at the lows. But it could quite happily be just a practice day. It doesn't have to be a trade. You know, obviously, sort of like this is about making money, but it's also about kind of improving the skill. So if the skill can be improved on practicing, then that's well worth doing as well. So this is something that I'm looking at right now, and I'd want to wait until the end of the top of the hour. And if it was to kind of work out, there would be plenty of there's plenty of upside there for it to go. And as I say, I'll be sort of, because of the other factors, because of the fact that I don't like it when the market is slow. I don't like it when I've got a monthly pivot to kind of get through. And that would be enough to kind of make me say, okay, it's not quite the environment I favor trading, but I've got a setup. I've got an okay setup. It's not too bad. So I would note this down and say, well, you know, maybe this is a practice trade, and it's all right. I think we don't practice enough in a way, do we, mate? When you think about sports people and all, you know, they kind of go away and they practice. They sort of like they will have a day where they're off. I mean, maybe today's not game day, or this session, I should say, is not game session. So yeah, I'm going to note this one down, but I'm probably I'm going to sit out the market today, and or certainly for this session, and not get involved in any trades, mate.
All right, I'll give you it's not a different point of view, but it's very much the difference between intraday trading, which is what your thing is, and
Yeah.
on a Monday, for me, it's all about weeks. It's all about the
Yes.
weekly charts. So I'm going to look at Euro Kiwi and Euro CAD and Euro Aussie and show you how this could work out beautifully for both of us. So, sorry, Euro Aussie is yours, right?
Yeah, or Euro Kiwi.
Euro Kiwi, same.
Yeah.
Yeah, but I mean, they're very similar charts for me anyway.
Yeah.
So here's what I see on Euro Aussie. Euro Aussie to me has limited upside certainly, and I'm on a weekly chart, right? So there's
Yeah.
plenty of profit in there for you, no question
Yeah.
at all.
Yeah.
But if that goes to there and finds resistance, then maybe not by the end of this week because it's a big bar. It's got a long way to go. But if the upside not necessarily fails, but if it turns out to be that this double top is now going to rule the roost for, I don't know, 2 months, 3 months, 6 months, who knows, then the setup that I've got is also valid, which is a false break
Yeah.
of this resistance trade line. And I would not enter here because your setup is saying go long, and that's perfectly fine. But I would enter here, and I might have to wait for, I don't know, 3 weeks before that even gets near to an entry. But it's still perfectly valid. And, if you get some profit in the bank before here, you may well pick up the reversal or the breakout, if you like, of this range that has been in for 12 months or more than 12 months. So it's failed every single time it's gone outside that range. It's failed here, 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 and failed here again. So eventually this will break, and it may go here, it may go here. But these are the sort of setups that I'm looking for to give me a potential big reward, because we're talking down here for a risk of, you may be looking at 5, 6, 7 to 1. And that's why I think these particular scenarios are very interesting. Boring as all get out, because you may have to wait for ages and ages and ages. But it's exactly the same on Euro Aussie, Euro CAD. Euro CAD's the same setup. Potential false break. Big. In fact, this is a good one because the range is clear, and you could easily find yourself down there at, I don't know, Christmas time, I don't know. And the other one's Euro Kiwi, which is exactly the same. You've got to get some profit in the bank before you hit the bottom of the range. But if it does reverse, as the double top suggests it may, then you could well be down here somewhere. So those are on my watch list for the week. Am I going to place the trade this week? Maybe, maybe not. 2 on the watch list that I haven't mentioned. One's Euro versus the pound, and I've got absolutely nowhere near a setup for this, but I'm absolutely bearish this pair. Not so much on a technical level, but the technical level is still there. Big reversal bar last month on Euro versus the pound. And every time we've seen one of those, we do get a sell-off. The last 3, that one sold off, that one sold off, that one sold off. This is the biggest one to date since that one, actually. And we are underneath, well, are we underneath? That line is actually not relevant. It's probably more like there, and that creates an issue because you bang on it. But if that does follow through, then you've probably got some profit to be had as well. And again, Aussie Kiwi, I don't have a setup for this, but I'm quite keen on trading the Aussie long against the Kiwi. Why is the question? Well, it really comes down to this scenario. I'll try and draw it. Where's my pen? There it is. It looks to me like we've got this going. And I'm not suggesting that we trade long here, but we've just snuck back inside, and this is very inaccurate, but we've just snuck back inside and bounced off the bottom of that ascending triangle. So I'm suggesting that here to here is probably a reasonable place to get some profit. If you're gutsy enough to trade the monthly pivot and it doesn't go up here, happy days, but you're probably looking for an entry well before the end of this month. I certainly am. So what do I do? Well, I'm bullish. Aussie versus the Kiwi. I look for a better entry or an entry and something that we're bouncing off. Big bullish engulfing bar there. So that's a game changer bar on the weekly. Do I trade that? Not happy with the entry level because the monthly pivot's there. But any pullback here on Aussie versus the Kiwi on a daily chart, maybe even a 4-hour chart this week, I'm more than happy to trade Aussie Kiwi long. I just can't trade it here. Break and retest, yep, makes sense. But right now, that's also very, very sharply in focus, Aussie versus the Kiwi long. So there you go. There's a few ideas. One thing on the intraday timeframes, euro versus the dollar, very early this morning, well before Asia session, actually. What chart's this 30? Yeah, that's before Asia session. This took off for some reason. Don't know why. But we've already had 1 phase, 2 phase, 3 phases. We are above DR2 at the moment, and we've got, okay, it's not untested daily pivot, but it's the next best thing to an untested daily pivot, because really the daily pivot came to price. Price didn't go to the daily pivot. I'm expecting that there will be some form of retracement here at some stage today, maybe into New York session before that happens, and why I don't know, but I'll be looking for a double top, and in George's world, double top lower high, that gets me short, or even a slingshot setup of some kind, and I'm not sure what that is at the moment. It doesn't look likely, but euro dollar short on a small time frame, 30 minutes, 15 minutes, makes perfect sense later in the day to me. I don't see it going too much higher than DR2, frankly, which is where it currently is. And where we currently are, mate, is at the end of the show.
Sounds good, mate. Sounds good. Yeah, all good things. I mean, just for the guys in the room, is you don't have to trade every day, and it might not be anything there. Have a really good look at the charts, and do some other work. There's always work to be done. Whether it's on noting down some of the signals that you're seeing, noting them down, and sort of like tracking them. So still watch the trades and see what happens. Whether it is just something to do with something outside the chart like fundamentals or COT or seasonals, that's also an option as well. But certainly from where I'm sitting, there's not a very attractive market currently. That's really where I'm right now. So things can definitely change. And incidentally, your euro dollar trade may well change in about an hour, mate. We got some labor cost data coming out and trade balance data from the eurozone, so that might do something.
May well. I have to find a way to be in front of the charts. That's my issue with intraday trading at the moment.
Yeah,
I just can't.
Yeah,
Can't do it.
Yeah, understood, mate. I mean, life comes first in the end.
Well, work comes
Work
first.
comes first in the end.
And sleep's a very, very good second. I'm still not over this bloody flu or cold or whatever I've got, but kind of making me tired. So
the COVID.
Can't do as much physical work as I should be doing.
Yeah.
We'll see. Anyway, we'll have a good week no matter what happens. I hope I have a better week than last week. I had a shit week last week. It was awful. Trading wise, wasn't real good. Anyway, that happens, as does SH1T. We'll catch up later in the week, buddy.
Yeah, so certainly will, mate. Yeah, see if we can remember this week.
Yeah. Shane, great to see you in the room. Gary, as always, good to see you. And I'm sorry about last Wednesday. Mohammed, great to see you in the room as well. And thank you for being our trading buddies for the day. We'll hope to see you next Monday. Have a great weekend.